As the guy who's been selling you Blink Charging stocks since the $1.25 lows, all I can tell you is I'm more than qualified to talk about these earnings here, right? I need to talk about these earnings. They just report earnings after hours. Stock popped 15% after hours too. Pretty massive gain. Obviously, 15% is a massive gain. And this isn't a company we typically look at the earnings of for a few reasons. Well, it's not one that's very noteworthy, right? The company does not make much in terms of revenue at all. It's a very tiny amount in terms of revenue because the company really still in its infancy. Very speculative stock, and that's why we don't talk about earnings that much. But with how the stock's been performing, yeah, trust me, I know. I hopped out of my position up 482% this year. I hopped out of my position around the $10 range because I had concerns about valuation. But we'll still look at this thing and see what's going on. So Blink Charging puts up an EPS of negative 11 cents, which misses by 1 cent. Nothing major to report there, but a revenue, and this is what I'm talking about, revenue of $1.57 million, which is up 118% year over year and beat by 34 million, so $340,000, which is a big beat for those numbers, but still a very minor number there, all things considered. I want you to think about the fact that prior to the after hours jump, this is a stock trading at a $271 million market cap. And this is a company bringing in annualized revenue, even after this massive jump. Annualized revenue for the year, likely, my assumption, will be around $5 million. So, $5 million in revenue, and the company's trading at a market cap of $271 million. And after today, after hours, it'll be trading closer to probably a $290 million market cap. So that's where my concern comes with this stock, is in the pricing. The valuation seems incredibly expensive, and I know they're pricing in future growth, but this is not a company that grows just out of nowhere. It's going to be that. We're talking about a 10-year development, and that was my long thesis for this company, and I was ready to hold it for a long term. But when I reached up 400% in the matter of a month, I decided it was time to hop out, and I do believe there will be opportunities to hop back in later. This stock is a long-term story, and I think it's been jumping a little bit too high because of pandemic concerns, right? Everyone's hopping into electric vehicle, and I think there will be a time where it drops again. You look at those numbers and it just seems a little crazy, but product sales increased 352% year over year to 1.3 million, which is a big part there. Product sales is their money maker, and the more really devices you have out there, the more they make, really. That's just how it goes. The company deployed 662 units during the quarter, which is big for them, no doubt. We were pleased that revenue for the first half of 2020 has already surpassed our revenue for all of 2019. So, again, the company didn't bring in $1.5 million last year as a whole even. Didn't even bring up that as a whole. But it's trading at a market cap of $280 million at least by now. Crazy stuff. Driven by tremendous momentum being generated from marketplace interest in our product and service offerings. We are seeing more and larger opportunities across the business as host locations, strategic partners, EV drivers, and investors recognize the value of our portfolio of charging solutions. So my bash on this, and why I say it's a long-term story, is the electric vehicle thing. In my opinion, I don't think there's even a chance we get to the point where a majority of vehicles on the road are electric vehicles until likely even past 2030. A majority of vehicles are still going to be normal ICE vehicles, internal combustion engine. These are going to be gasoline vehicles. Probably 2040 is when we see a big mass majority that's going to be involved in electric. That's my opinion on the matter. I still think we're a long way out, and that's where Blink benefits. But they're not going to benefit quite yet because there's no reason to have an innumerable amount of charging stations if you're not going to have an innumerable amount of electric vehicles on the road. So that's really my reasoning behind selling out of this thing, if you were curious. But we're here to look at these earnings, right? We're here to look at these earnings. Very nice stuff. A total month of 3 ending 3-month ending period rose 120%, as we saw. Total revenue for the first 6 months is $2.9 million, which exceeds full year 2019 revenue of $2.8. So again, the company could bring in $6 million this year, but my theory still remains. I don't even know if they'll do that. Record quarter revenue, $1.6 million versus $0.7 million second quarter of last year. Product sales was pretty massive. Net loss was $3 million, and again, you can have some concern with that, and I think you should. They lost $3 million and brought in 1.5 in revenue. That for me is a concern as far as valuation is concerned, right? In 2019, they only lost $2.2 million, and again, that was off a lot less in terms of revenue, but still, you see an increased net loss, and overall, just the valuation, in my opinion, should not be going up as high as it is right now. I like the stock. I like the stock a lot. Don't mind me. I like the stock a lot, but just a concern for me as far as that's concerned. So they did achieve a key milestone of 1,000 installations of the 19.2 kilowatt IQ200 charging stations. They announced a joint venture with Envoy Technology to deploy electric vehicles and charging stations. Potentially 7,000 chargers within 5 years, 2,000 within the next 12 months, which is massive, obviously. Because you talk about 1,000 equivalent to where they're at right now, 2,000 expected in the next 12 months. I mean, that's tripling their revenue potentially. Should triple it within the next year. Still just doesn't get the valuation for me, in my opinion. They expanded deployment and contract renewal of the IQ200 charging stations in the city of Portland. They announced an inclusion of Blink charging stations as part of Apple's iOS 14 Maps app, which is good, so people know where to charge. They continue to maintain safety measures related to the pandemic. I gotta love that. Deployed 662 units. Appointed industry powerhouse Brendan S. Jones as new chief operating officer. So, good stuff there. There's a lot of stuff to talk about with this company, obviously, as we mentioned. I do need to get to this 10Q to look at this balance sheet, as I would like to do, because you gotta look at it. Consolidated. Okay, we got this. There we go. I was looking for it, and they're like, it's right under my nose. So, again, you need to notice, it doesn't say anything about thousands here. This is just their legitimate cash totals. Again, small company. Here's on your left side, what you want to look for. They give me a 6 months comparison. Cash and cash equivalents of $3.8 million versus $4.1 million. Cash and cash equivalents fell a little bit. Total current assets of $7.9 versus $10.1 fell quite a bit. That $3 million loss certainly hit them. So by around $2 million they lost in terms of total current assets. Total assets in general fell by around $1 million. 10.9 versus 11.9 of 6 months ago. But one thing you need to find as positive for this company, you can say is the liability number technically. So they do have half the liabilities that they do in terms of assets, $5.5 million. But again, that is versus it's a rising liability versus a shrinking assets here. $4.5 million to 6 months ago in terms of liabilities, $5.5 now. And again, that's a lot of it because the debt they brought on really to get through everything going on right now, which makes plenty of sense. So I get why they're doing it. Balance sheet still, it's a 2-to-1 ratio, stockholder equity of $5 million. It's, all things considered, not a bad balance sheet. Could be a lot worse, but accumulated deficit is an ugly number. But balance sheet could be a lot worse, right? Overall, it shrank. In the past 6 months, it shrank, and I think it will continue to because the more they deploy, the more that net loss increases. So there could be concerns as far as that's concerned, but I do believe this stock can raise capital just fine. Again, my main theory against this, buying it right now, is the valuation. I think it's too expensive, and I do think you'll find a better buying opportunity in the future. Personally, I want this thing, and I mentioned it under $7, I'll buy it. but I don't like it right now at its valuations because I think it's really near its peak for where it's going to fall for the next little while. And I do think if we have a really bad stock market situation, which I don't necessarily know if we will, but I do think that this is it's a concern, right? If you're investing at these levels, in my opinion. So, I'm glad I saw that with 400% gain, over 400% gain. I'm not upset with that. What I am upset with is buying it right now. I can't buy it at these levels, and I did miss out a little bit. I can't lie, cannot tell a lie. But regardless, I hope that you enjoyed this and you have a fantastic and swell day.